Happy Friday. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Hey, good morning. How are you?
Good morning. Last day, I'll be in Miami for Art Week, but it's been a fun time. All right, checking in on Bitcoin, the CoinDesk Bitcoin price XBX index currently trading at $56,820. Bitcoin is slightly up about 0.5%. The CoinDesk Ether price ETX index is at $4,595, now up about 1.4%. And the DFX CoinDesk DeFi index, however, is in retreat about 1.2% at 546 points. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So looking at the markets, Lawrence, slightly up, slightly down.
It had a minor rally. When I say minor, a couple of $100, maybe $500-600. When the jobs report came out for November, there was 550,000 expected new jobs. We only got 210. It was kind of disappointing. Unemployment rate went down to 4.2%, which is like pretty good. I mean, like you're saying, hey, this is a great time. We're back. Labor participation's about where it was pre-pandemic or so. So you'd think like, all right, so everything's good, right? No. It's still not quite where we think it should be. And I think the crypto markets, they don't react to these macroeconomic data as you would expect them to, which means it's still not a mature market. But if you're stepping back a little bit and you're looking at it from the long term, you're saying, okay, well, what's the Fed going to do? And the Fed might not taper quite as fast as we thought they would. So that might mean a little more inflation coming up.
Markets are trying to find some direction. Emily, what are you looking at?
Well, I just don't think there's much point in looking at these daily fluctuations because we don't really know what's driving them. But I think the big question here is just what's going to happen with COVID and how much Bitcoin is going to track the larger equities markets. And that's just like kind of raising this eternal question of how much Bitcoin actually acts as a safe haven.
Well, 2021 has been an incredible year for crypto. Nevertheless, Bitcoin started just under $20,000, soaring through breathtaking peaks and valleys, hitting an all-time high of almost $69,000 just last month. Christie sold an NFT for $69 million, and Sotheby's was introduced to Constitution DAO and the power of decentralized crowdfunding. So very curious to see what 2020 will behold. Joining us now to discuss is Messari CEO Ryan Selkis. Hello there, Ryan. You've written a 134-page monstrosity, your words, describing your annual theses for 2022. What's the TLDR?
Well, that was actually last year's that I described as a monstrosity at 134 pages. So this year's is actually 165, which I guess is more than a monstrosity. But I think this has been a wild year, obviously, and we're excited about what's to come. The biggest theme, I'd say there's probably three themes. One is just what's happening in the broader context of the world and the markets. I think trust in institutions continues to decline, whether that's in mainstream media, whether that's in politics. The disconnect between tech and general the political sphere and social sphere. I think there's a trust deficit, and that opens the door for a lot of the innovations that we've been talking about for years within crypto. So you've got the kind of problem-solution match, and I think the kindling for some real continued progress. The second key theme is how many of the building blocks are fully in place now, right? The currency markets are liquid, the stablecoin markets are liquid, and that infrastructure is very robust at this point. You've seen decentralized finance applications now scale for the better part of 2 years, and DeFi is actually in a secular bear market since the beginning of the year. It's flat or down for the most part versus Ethereum and some of the other comparable assets. But during that time, you've seen a lot of sophisticated players come in and The same can be said with NFTs, which have obviously had their moment this year, and all of these other layer 1 and layer 2 scaling solutions. So you basically have like scaling, decentralized financial markets primitives, this new primitive in NFTs, which allows for all sorts of digital asset trading and IP trading, and then of course you've got this macro backdrop. So then the third theme I'd say is the thing that could end the party, right? And that is overly broad crackdowns and restrictions on crypto development within the U.S. I think the U.S. is very different from China, right? China was able to effectively ban crypto, and things just kind of moved right along because I think most people didn't really believe that China was ever going to adopt peer-to-peer finance or decentralized currencies. I think the U.S. is different. If we see some enforcement actions against major DeFi protocols, if we see a lot of kind of negative actions from the SEC in particular, but also the OCC and Treasury, that could maybe prevent the wind from kind of filling our sails because people are going to be in batten down the hatches and defensive mode in the new year. I think I'm a permeable long term, as you know from having me on a couple of times in the past. Medium term is a little bit murkier, but I think so much of it hinges on whether we're going to get any type of reasonable policy response out of DC or if they're just going to be indiscriminate with a crackdown in the new year.
So Ryan, I want to ask you about that third point about regulators. Where do you see it pragmatically fitting in? Like where should they be, and what are they actually doing? What are the things? What's the difference between where they should be and where they are? And what do you think will actually happen in 2022 with them?
Again, I'll kind of go back to three kind of core themes. I think the first is that the SEC needs to implement the safe harbor because their current approach has just been a catastrophic failure across the board. When it comes to enforcement actions, they've basically had 0 wins under their belt. The closest thing that they could consider a win was a minor slap on the wrist for the EOS token sale back in 2017, the proceeds of which ultimately were rolled into about $10 billion of privatized wealth transfer for what is otherwise a protocol that essentially no longer works, in large part because the developers had to step away from it lest they look more like a security. So I don't necessarily, I don't fault Block One for how they've kind of reacted to the situation and how they've defended themselves and how they've ultimately parlayed their token sale success into a new exchange. That's on the SEC, right? I think that should be an embarrassment for the entire commission. XRP, they've still got an uphill battle. They're going up against their former chair in Mary Jo White, who's actually on Team Ripple right now as part of these proceedings. And instead of taking a step back and actually acknowledging that the approach isn't working and maybe they should seriously consider something like Commissioner Peirce's safe harbor, they've outright ignored it. And in my annual report, I kind of broke down the 8-point case against Chair Gensler in particular, because I think he's been dishonest over the course of the last 6 months when it comes to crypto. I would love to see them actually review the safe harbor and take it seriously and consider how something like that might be implemented, because that would weed out fraud. It would, I think, set the industry up for success. It would save the SEC a lot of time and energy and headache, and we'd be able to move forward. So I think that's kind of the big one. And then the other two, just really quickly, I think we need to see some common sense proposals around stablecoin regulation that don't include making every single stablecoin issuer a bank. I think being able to leverage banking deposits is one thing, but technology companies like Circle and Paxos and others, I think if they're regulated, like full-blown banks, that's probably a step too far. My guess is, the best case scenario would be something like what we've seen out of Wyoming, where there are specific, depository institution charters that are custom fit for crypto companies. These are fully reserved institutions. You're not even relying on the fractional reserve system, but you will have access to, the Fed and be fully integrated and give regulators the ability to closely surveil and kind of watch what's happening with these regulated stablecoins. And then, the last one in just one sentence, I think, we need to actively fight back against this nonsense narrative of Bitcoin being this dirty, planet-destroying innovation, when in reality it accounts for 0.5% of global emissions and is getting cleaner every day between the pullout of China, Chinese miners, and all the investments that are going into renewables and recyclable energy here in the U.S. and the West.
Ryan, thank you. That's quite meaty. So you just phrased that all in a relatively diplomatic way. But in your report, you actually refer to SEC Chair Gary Gensler as a fraud. So can you explain what you mean by that? Because that's obviously a very strong word.
Well, I believe the exact line was, I think he's a liar and a fraud. So, and I kind of break it down in detail in the report, but I think he was dishonest in front of Congress when it came to his answers to Rep. McHenry on the safe harbor and his knowledge of it, and whether he'd reviewed it with Commissioner Peirce. I linked to the video. You can kind of tell for yourself. I think he's been dishonest about his whole approach with exchanges. His line that he continues to trumpet, come in, talk with us, engage, is nonsense, because most of the big exchanges have broker-dealers and they're stuck in limbo. So the broker-dealers that they have acquired have not yet been approved to handle digital asset trading. So come in and talk to us, but you can't actually do anything, even though you have these licenses and you've been waiting for our approval. It's absurd on its face. I think there is no person with two eyes and the ability to reason that would think their approach to the crypto ETFs and the Bitcoin ETFs in particular is anything other than Wall Street friendly and retail investor hostile. So what he's actually engaged in is hostage taking when it comes to the approval of the spot ETFs. And the reason that they haven't actually approved a spot ETF like Grayscale's or Bitwise's or others comes down to the fact that he wants full oversight and surveillance rights for the entire crypto market. And he's hoping that Congress will give that to him, or he'll be able to finagle his way into that regulatory authority using the Howey statute or some guidance from FSOC, the Financial Stability Oversight Council, that is largely deferring to him. And there's there's pretty much 5 or 6 other points that I make in there. But they're all, I think, equally concerning. And I guess the last one that I'll end on is when we talk about the safe harbor, it's a 3-year safe harbor, right? And it does include reporting provisions for some of these early crypto asset projects. The SEC has basically said they're not even going to entertain that, or they've outright ignored it. Meanwhile, we have multi-billion-dollar, $10 billion plus companies, and dozens of Chinese companies that are listed in the New York Stock Exchange that are not actually submitting themselves to proper audits, and have these shell companies that were basically the backbone for Enron that they operate out of in offshore vehicles, and somehow U.S. investors have access to those. And the SEC's implemented a 3-year grace period for them to come into compliance, but not American crypto companies. Instead, they're trying to go after entrepreneurs and protocol developers for airdrops. Look, I'm not going to back away from what I said. I'll double down on it. But the details, I'd say, I'll let the writing speak for itself, and people can make their own assessment of what they think about Chair Gensler. I should end there by saying, we believe strongly in the SEC mission. There's a lot of similarities between our mission at Messari, protecting investors, improving information symmetry, and meeting out fraud. I called out Ripple for some of its practices 3 years before the SEC actually enforced against them in late last year. So this is not about an anti-SEC position. There's a lot of great people there that are working on crypto policy. Hester Peirce, right, I think is particularly insightful. So it's not a universal criticism. It is very targeted towards someone that I think is a political animal that's trying to abuse his position to ultimately catapult himself into Treasury.
Well, as you say, a lot of crypto firms are trying to work with regulators, bridge that gap between the crypto industry and DC. But calling Gary Gensler a fraud and a liar, or even Janet Yellen a white-collar criminal and grifter. Is this type of language doing more harm than good? Is that ever a concern?
Well, I mean, I think people need to be able to take advantage of their First Amendment rights and call out, abuse and excess. The Yellen quote that you're referring to was something that I tweeted over the summer in response to the mammoth fees that she had gotten speaking for the 1 or 2 years that she was in the private sector between public sector roles. My point with that was, you don't get the speaking fees if you're not parlaying that, as influence for when you're actually in a position of authority like Treasury Secretary. So to leave that aside, I mean, that was over the summer, and I think we discussed that previously.
We did.
But with
just pivoting
with Chair Gensler, I mean, it's like I said, I'll let that, I'll let the writing and the case that I made stand on its own 2 feet. At some point, you have to push back when people are being dishonest. So I'll let others that are in the regulatory and policy sphere have a different set of conversations. But when it comes to, kind of telling the truth and courting public opinion, I'll do my thing and they'll do theirs.
So Ryan,
you, in your last report, you had mentioned, or you have mentioned, that Bitcoin would hit $100,000 by the end of the year. It's almost hit $69,000 this year. So not quite there, but not far off. What's your prediction for 2022?
Well, I outlined in the report, and this is obviously full of caveats in terms of what some of the political headwinds might look like, and do we have any type of macro shocks? But I think one of the parameters that we look at for when the Bitcoin market is overheated or oversold is something called the market value to realized value ratio, and that basically looks at the current market cap of Bitcoin versus the market cap applying the price per Bitcoin at the time a given Bitcoin last moved, and kind of summing up all the addresses. So if you have a bunch of Bitcoin from 5 years ago, the realized market cap of those particular Bitcoin is going to be much lower than the current market cap. And so what you want to look at there is any move above 3 in that ratio is typically like a blow off top and a cyclical high. Anything below 1, say, is has been a historic opportunity to buy. So, basically the parameters then would be somewhere between, 40,000 and 120,000 would be the 1 to 3 ratio right now. So I still think it's, completely in the realm of possibility for us to see, a $125,000, $150,000 Bitcoin, because that would be this market cap to realized value ratio of 3, which usually is the high. Whether that's sustainable is a different story, but I think historically that's been a pretty good proxy for momentum and kind of how hot things are getting.
So Ryan, please don't hold back on anything here, because I have a question about stablecoins. Getting back to what you were saying and the role of the SEC and whether or not stablecoins should be regulated as bank, isn't it really that there are a couple of actors, one in particular, which isn't as transparent as the market would like it to be, but nonetheless uses it for its own means? Where would that fall? Like, how would you regulate that? I mean, how would you regulate an overseas company that is purposely opaque, and where the customers don't mind it and actually want it to be that way? What happens there?
Well, you're referring to Tether, and I think the whole issue with Tether is it's a I don't want to call it a necessary evil. I'd say it's a byproduct of poor policy in the West when it comes to crypto regulation and integration into the financial system, right? You've had dozens of companies that have applied for BIT licenses. You've had, half a dozen exchanges that have actually acquired broker dealers and applied for the appropriate, licensure. And still, kind of 13 years into the development of this ecosystem, you've got basically no guidance from the banking regulators as to how banks can interface with crypto companies. Right? That's naturally going to create a dynamic where you need some ability to get into dollarized assets because that's still the unit of account globally when it comes to trade. So I would say there's a big opportunity for regulated stablecoin issuers, and we've already seen this with Paxos and their partnership with DM. Obviously, we've seen this with Circle and its explosive growth. But with Tether in particular, I don't think that demand is going to go away until there's real, honest engagement from Western policymakers over how to bring this technology and how to bring these assets under a common sense regulatory framework. I think it's an unfair criticism for regulators, policy leaders to say that this is the Wild West and the industry needs to come into this regulatory regime when the guidance to actually do so has not only been unclear, but it's been actively blocked or encumbered by the fact that there's just no movement on the regulator front. So I think in that respect, there's a reason that the major crypto institutions want Tether to exist and continue to support it, even though it's certainly imperfect. And I think the entire world would be better suited if we had more transparency into its reserves, and you knew that its reserves were unseizable because it's still a little bit of a shell game where these assets actually live. I think people deal with it right now because it is riskier to do business with Western governments than it is with an incumbent crypto player that's historically made a lot of money and ultimately made good on its depository requests whenever someone has come to redeem. So again, I think that's more of an indictment of our current political and regulatory system because I don't think anyone in their right mind would prefer a Wild West, $100 billion stablecoin issuer versus something that could seamlessly function with the rest of the financial system. Ball's in their court.
All right, Ryan, we got to wrap it there, but thank you so much for your insights. There's a lot of meat and potatoes behind those sometimes incendiary comments and tweets. The Messari annual thesis for 2022, you want to catch it. That was Messari CEO Ryan Selkis. Coming up, checking in on Asia and a crypto markets update with the co-founder of boutique investment firm BANQ.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lin.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Doreen Wayne.
I'm Nicholas Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching.
And you're watching CoinDesk TV.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Megha Chatta of Forecast News.
Welcome to the Daily Forecast, December 3rd, 2021. I'm Megha Chatta of Forecast News, covering all things blockchain. Privacy is a key word in the cryptocurrency world, but do you realize how much personal information you are giving away when you show off your latest NFT purchase? We'll take a look at that and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, local financial authorities in Beijing have announced the release of another batch of eCNY coupons to promote adoption of the digital yuan and as rehearsal for the Winter Olympics, which open on February 4th. The Winter Olympics are seen as a key test scenario for stepping towards introducing the eCNY globally, with authorities hoping that the athletes from around the world can use it then. Meanwhile, Badger DAO, which focuses on bringing Bitcoin to a DeFi, has suffered an exploit with estimated losses of $120 million. Badger DAO said on Thursday that it had received reports of unauthorized user fund withdrawals and that smart contracts would be paused while the issue was investigated. You can find those stories and more at forecast.news. Shifting gears now as we enter the world of disintermediation, where we explore how disruption has created new rules of engagement, so how to navigate. To help us out is Adrian BANQ, co-founder of Anoma, a sovereign proof-of-stake protocol that replaces money by enabling asset-agnostic cash and championing privacy. Adrian, it's so great to have you with us.
Glad to be here.
Speaking of privacy, this next issue I bet very few people are even aware of how vulnerable they are. When one discloses they own a certain NFT, maybe a particular CryptoKitty or a Bored Ape, is it just an innocent digital bragging, or are you actually setting yourself up as a target for hackers?
I wouldn't say so much as in you setting yourself up for hackers. You're just disclosing your entire financial history potentially to whoever you're showing this Bored Ape to. This is an identifiable thing. I look at the ape and I go, well, I know this ape. This allows me to look up the specific address that currently owns that ape. In the best case, this address only owns the ape. But predominantly what actually happens is that people reuse addresses all the time. And so all of a sudden, I not only see which ape you own, but also which other NFTs you own, or how much ETH you own, how much ETH you've owned in the past, how many USDC, what kind of trades you do.
So how do you make these purchases more secure and frankly keep them anonymous, the way most people believe cryptocurrency is supposed to be?
The one thing you could be doing is minimizing the amount of information that the world has about you. So for example, what you could be doing is you go to Kraken and you withdraw some ETH and then use that to a completely new address. Then you use that ETH to buy the NFT that you want to own, and you only use that address for that NFT and nothing else. And it means that only now Kraken knows how much you hold.
Well, there you have it. Who would have thought your digital portfolio is out there for all to see? Adrian BANQ of Anoma, thanks so much for joining us today and shedding light on this very important issue that we all definitely need educating about. Over in Australia, one firm is looking to use NFTs to raise awareness of mental health issues. The Aussie Mates NFT project will offer well-being support to owners of its kangaroo-based NFT collection. Focus News' Lachlan Keller has more from Melbourne, Australia.
Much of the world has faced times under varying levels of lockdown over the past couple of years, and the spread of the Omicron variant has raised that threat once again. And globally, collective mental health has been severely impacted, with the OECD reporting that the prevalence of anxiety, depression and mental distress has doubled in some countries. Aussie Mates is aiming to raise both awareness and funds to address the issue with its Down Under themed NFT series in partnership with mental health non-profit Livin'. The collection of 10,000 unique kangaroo NFTs, inspired by elements of Australian culture, is to go on sale early next year. After that, owners, known as Down Under Club members, will be able to access Livin's virtual health workshops, resources, and early prevention and intervention initiatives. Its Livin' Well program is based on the mantra, "It ain't weak to speak." It aims to break down stigma while encouraging people to seek help. For Forecast News, I'm Lachlan Keller from Melbourne, Australia.
And that's the daily forecast from our vantage point right here in Asia. For more, visit focus.news. I'm Megha Chada. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Quick check-in on Bitcoin. Right now, the CoinDesk Bitcoin price, XBX index trading at $56,756. Bitcoin slightly up about 0.3%. The CoinDesk Ether price, ETX index, is at $4,584. ETH climbing about 1.2%. The new DFX CoinDesk DeFi index is down about 1.4%. Trading at 545 points. Joining us now to discuss the crypto markets is Mark Elenowitz, president of trading software firm Horizon Fintechs. Hello there, Mark. Happy Friday. So we've been seeing a narrow trading range for Bitcoin all week long. When do you see a breakout, either up or down?
Well, I think a lot of it has to do with what's going on now with the Omicron story. We saw Bitcoin get a little bit stopped in tracks this week after it started coming under pressure, because we're just not quite sure what's happening in the world related to now where we're going to see this COVID outbreak. And now we saw it here in the United States. It's actually come out and seems to be in over 12 states and expanding rapidly. Same thing is going on. What we're seeing kind of the opposite, though, is in the Ethereum pricing, because everything related to the NFT market, and we're starting to see new highs. So I think Bitcoin itself is just going to continue to hover around here. Your last guest, I think he hit it on the head. We're going to start seeing Bitcoin trend up over the next several months, and looking into 2022, I think it's going to be a pretty good year.
So, Mark, what kind of catalysts are you expecting to actually move things? Because we did have this Omicron variant news come out last week. About a week ago, we saw prices dip. We saw the amount of open interest in the perpetual futures market take a small dip. It wasn't that much relative to the overall size. And the overall size of that perpetual futures market is pretty high. So, I mean, what's going to ultimately move the price of Bitcoin if it's not necessarily Omicron right now, and if it's not necessarily inflation worries? Where does it happen?
Well, I think it's ultimately regulation. I know a lot of people don't look at it that way, but we've seen Gensler here in the U.S. make some comments. I would not describe him as a fraud, like your last guest. I think that's a pretty gutsy move. I think it's really important as a whole that we look for regulation. We're seeing more and more investors, retail investors, get involved in this marketplace, whether we're talking Bitcoin or Ethereum or Dogalong or Dogecoin or Shiba Inu or any of these coins. It's starting to create problems where retail investors are jumping in. It's like what we used to see in the regular stock market back in the 90s when you'd be riding and somebody's talking about how they're trading $100 worth of AOL in their day trading accounts. So I think as we see regulation and we see things are more clearly defined from a standpoint of these cryptocurrency firms, as are they deemed to be securities? Are they deemed to be broker dealers? And where that regulation and where that comes out. And the reason I'm saying this back to Bitcoin, I know we like to look at it as it shouldn't really be tied into it. Ultimately, these markets are going to be dictated based upon regulation, whether it's here in the U.S. or in other marketplaces. And that would then ultimately allow ease of use for retail investors to become able to come into the market, trade these currencies, trade these asset classes, and be able to buy them for their portfolio. We're seeing more and more institutional interest grow. We see a lot of retail interest grow, but really mainstream America still hasn't adopted it yet. So I think that would propel additional buying, ultimately driving prices higher or lower.
So it's really interesting because we've had a bunch of guests on the show, including our last guest and you, who are kind of signaling this regulatory, I guess, crackdown or tightening in the United States. Yet at the same time, we're also having a bull market. We've seen Bitcoin and Ether hit new all-time highs. So I guess the question is like, how do you square those two narratives? Is it that there's sort of a regulatory crackdown, but like people aren't really aware of it? Or is it the idea that these coins would actually be much higher if regulations were more friendly? Because they seem like two different narratives, right? Like, how is the US cracking down on Bitcoin, yet Bitcoin is still soaring? Like, why? How do you square those two things?
Well, so let's move away from Bitcoin for 1 second. Just talk about the irrational exuberance of some of these coins. I mean, I was getting my haircut last week, and my barber put in $2,000, and he thought he hit the gold mine because he made $60,000 on his, I think it was Dogalong coin. I mean, that is just nonsense, because what it is, it's a bubble, it's a pyramid, it's what we call in the regular marketplace is pump and dumps. At some point, the music's going to stop, and these coins that don't really have any utility function and nothing that will be able to provide ultimate value is going to pull out. That's where regulation needs to come in. When you look at something like Shiba Inu, and then you see AMC now saying they're going to accept it to be able to buy movie tickets, I mean, to me, it's just crazy because people don't understand the transaction costs and the fees associated with doing that. But when you look at ETH as an example, to me, now that's something where, again, let's tie back regulation. I think some of the moves are what we're seeing in the NFT space, where NFTs as a whole are really exciting. It's a transition. It's more so, in our belief, what we're doing at Upstream. And we are, by the way, a regulated stock exchange. We're probably the only national securities exchange in the world that's powered by the blockchain. And what I mean by that is we actually sell securities. These are not the cryptocurrencies, but these are tokenized asset classes that are equities, including NFTs, including being able to fractionalize an NFT. So allowing every investor the opportunity to own fractional ownership in some of these really expensive apes and the other things that we see in CryptoPunks. Come back to regulation. And now what you're looking at, where you see all these marketplaces like OpenSea and the others that are unregulated, allowing retail investors to come in. Once we see a regulation and more definition of terms, whether it's taxation, whether it's investor protection related to Bank Secrecy Act, all that will ultimately dictate into price. So ETH is rising because everybody's buying NFTs. That's at least my opinion. And I think we're going to continue to see that. And I think what we'll see is a rise in more utility type functioning coins. And I think we're going to see contraction in these coins that really have no other purpose other than some famous guy here in the US who might tweet about it. And suddenly everybody thinks it's the next greatest thing.
Yeah, I'll just counter slightly that Shiba Inu transaction fees are much less than Ethereum, but I understand you won't be buying any meme coins anytime soon, Mark, but appreciate you coming on the show and your insights. That was Horizon FinTech's president, Mark Elenowitz. Coming up, checking in on CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
When we say we want to reimagine money, it turns out we're going to the heart of the matter. Imagination has always been a key part of what money is. Imagination in the form of cultural creativity is also something that the cryptocurrency community has in spades. And to the outsider, that can be a reason to dismiss it as frivolous, as something built on nothing. To dismiss it for these reasons, though, is to ignore that all money is imagined.
Hi, I'm Serena Lin, line producer at CoinDesk, and you're watching CoinDesk TV.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So we hear about Senator Elizabeth Warren, a Democrat from Massachusetts, writing a letter last night against a crypto miner, Greenidge. What did she have to say?
Good morning. Yesterday, Senator Warren did write a letter to Greenidge CEO asking him to explain basically, what the company is doing and expressing a lot of concerns about the environmental impact of the Greenidge mining facility in New York, as well as the kind of broader, Bitcoin and crypto ecosystem and what sort of impact that might have on the environment just through the, mining process. The letter's pretty well cited. It references a lot of public reporting, including, CoinMarketCap and CoinDesk, for what it's worth, really expressing concern about, the on-the-ground experience of folks who live near the plant.
I'm sure Elizabeth Warren did all that research herself. So the SEC killed another spot ETF. Is this a lost cause? Why are we doing this still?
I don't think anyone was really surprised, right? No one expects the spot ETF to be approved this year. Even some of the most bullish folks who have been, predicting an ETF will be approved since 2017 have said probably not happening this year. Right now, the futures ETFs are live, and that's probably all the SEC is going to be looking at least for the next month at this point. Next year is a different story. There is some hope amongst analysts that there will be a spot Bitcoin ETF approved in 2022. It's probably too early to say. And honestly, my guess is we still have, I think, a dozen something outstanding ETF applications. Probably won't be any of those. If one of these is approved, it's going to be a well-established player in the ETF space, just like ProShares was a well-established player and it was able to launch the first futures ETF. It would probably take something similar to ProShares to launch a spot ETF if that does get approved next year.
Nick, earlier on we had Messari's Ryan Selkis on. You speak to a lot of folks in DC who hear Ryan's often very passionate remarks. What was your reaction to some of the things Ryan Selkis had to say?
I think, one of the things, going back to what we were just talking about with Elizabeth Warren, so Ryan mentioned that Bitcoin, or I think crypto mining, generates something like 0.5% of global emissions, which that is a lot. And that's a kind of figure where, 0.5% doesn't sound like much of anything, but we're talking about the entire world here. So that's quite a significant impact. And that's the kind of thing that I imagine a lot of the folks like Senator Warren and other lawmakers in DC are going to be looking at when they're saying, we have environmental concerns. And,
But Nick,
yeah.
Nick, along those lines, I'm sorry to interrupt, but remember a couple of years ago, I'm going back maybe more than a couple of years ago, when Diginomics put out that piece where they said that by the year 2020, Bitcoin would account for like half of the world's energy output, or would consume half of the world's energy output. So isn't this sort of like fear mongering when it comes to crypto? While there is significant use of energy in crypto, is nowhere near to the levels that they keep predicting it will be. Aren't they, like, in many ways, the Ryan Selkises of the world looking at this and saying, guys, you haven't been truthful and honest with us about your projections, and you're telling us that you know better than we do. So why is that necessarily a problem for Ryan Selkis to say, hey, cut it out, you guys are full of it?
Well, I think there's really, like, three different issues, right? One is, what are people predicting and how accurate are those predictions? One is, what's the perception in the places where policy is made? And then the last one is, what's the reality on the ground? And those three things can be fairly different. And in this case, it seems like that might actually be what's happening, right? You have one reality where people are talking about crypto mining and it becoming a more, environmentally friendly endeavor over the coming years. Other cryptocurrencies are, also likewise looking at different ways of becoming more environmentally friendly, whether that's Ethereum's proof of stake transition or, other efforts to try and tamp down on the computing power required. And that can be completely different from, the still, I think, very real concerns in DC that crypto mining right now does require, a lot of resources that could otherwise be either, completely not used, whether that's, in the form of coal mining. Coal, I think, accounts for a fair amount of, Bitcoin mining, but it's also, there's not that many coal mines left in the US. So, even a small fraction of coal mining being dedicated to Bitcoin mining is pretty significant amount of that industry. And then, honestly, I don't really know what the predictions are looking like at this point. Either they're accurate or not, but I think the predictions probably won't be as cited or as used in terms of just talking about what's going on right now. And whatever is going on right now, to the extent that it can be measured, is probably how, I think, for example, in Senator Warren's letter, that's, I think, what she was primarily focusing on. Not so much, what this might look like in 10 years, but how much of the energy being used for Bitcoin right now is coming from, power plants and other facilities that might otherwise be shut down.
Yep. Nick, the debate continues. Happy to have you on weighing in. Thanks for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, Emily, Lawrence, it's that time. Have a good weekend. That's it for First Mover. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All That Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.